Hello everybody, this is LA and this is today's short take. Yesterday we started talking about range trades. We talked about the S&P 500. Today I'm going to look at the Hong Kong shares and talk about a different type of range that's developed here in the Hong Kong market. And there are others, and we'll go to those in the coming days. But if you look at Hong Kong, on this time frame, we're looking at the daily. You had a very good strong move to the upside and then some sort of a blow off top, right? In other words, it spikes up, right? Sets a high volume high, right? And that, as a result, sets up a range. Usually what happens when you get a blow off top type like this, you get some sort of a quick reversal back down. That's what you saw here. Within a week, this thing had traded back down a significant amount. If we take the percentages, the top was 24.58, the bottom 23.20. So you're looking at $1.30, and so we're talking about 5% or so right off the top. Of course, it had just come a good 10%, actually more now, almost 20% in a short period of time. So getting 5% off the top is really nothing. After that, typically you're going to see this thing try to work back up towards the top, and in this case it actually made a nice little spike up and then gave it up, but you get a work back up, then a work back down, or you know what I mean, and it's back and forth. Question is, as we talked about before, yesterday in the video, is how do you trade this type of range? Yesterday we were talking about you could trade it two ways on the S&P 500. You could short the top and you could buy the bottom, right? Once that range developed for you, once you knew what it looked like, right, then you could do that sort of action inside of it. And if you take this one, just like we were talking about yesterday, you actually have two ranges inside the larger range now. And you can see how price gyrates around that boundary. In other words, when it gets over it, tries to pull back under it, tries to pull back over it, back and forth. This one's in the lower end, the higher end of the lower range right now. Now, if you project this out and you say, okay, there is a possibility this range could expand, where could it expand to? Well, you just have to flip it down and say, okay, here's another, equidistant move down, fill the gap. That might be the, where this thing goes if it is able to break down lower than this low. So in other words, if we get down into this area, what's it going to do? It's going to try to push to the next equidistant move, which would be back down here to fill this gap. That's the risk on this. On the flip side, going back to the question, how do you trade this? Well, this is a very strong blow-off type move, right? I don't want to trade that short because at some point it's going to try to seek this top again. So if I'm shorting, say, this move, I may end up with this and then have to cover, right? I don't want to trade against a strong trend. I want to trade with a strong trend. So in other words, I want to trade in this direction because that direction is the strong trend. So when I think about it that way, what does it mean? It means I want to buy pullbacks to support areas that I know about. This is one. If it gets under that, this is the next one. And so what we do is we look at those areas where we should find support and we try to buy those. That's a one-way range trade. It has to do with how it's set up, right? And that's how you look at it in terms of how do you trade it. How did it get to where it is? Is it strong? Is it weak? Is it sideways? What is it? That sort of range setup gives you an idea of how to trade that range and trade it in a safe manner so that you'll make money. Tomorrow we'll look at another one. That is Hong Kong market and a range trade on it in what is a strong move higher.